headlines to understand the reasons for the day's movers and shakers. And get your portfolio ready for tomorrow. Beaming live from the CNBC-TV18 Motilal Oswal studio.
The Hang Seng as well as the Taiwan Index managing to hold on to very, very strong gains in today's trading session.
Nifty Bank has made a new all-time high. It's taken out the prior high of 57,628.
The EBITDA of the company closer to 46,000 crores. This compares with 42,900 crores quarter on quarter.
If they want to say that, then they'll just continue to pay massive tariffs.
The fit and proper may not be an issue. However, the regulator has its own deeper understanding.
While we saw net interest margins declining just by 8 basis points, but it was in line with the street's expectation.
A 100-point uptick, 25,800 plus is where the Nifty is now opening at.
Commentary will now focus on how they pivot to be able to utilize this capital and grow their balance sheet from the current 1 lakh crores to maybe 2.5, 3 lakh crores over the next 3 to 4 years.
We are working towards achieving that 40 million number for this year and hopefully 60-65 million number for next financial year.
Next quarter, or rather this quarter as we speak, we will have the rollout of the wealth offering to our customers. So that is on track.
Markets in the cheerful mode. We are at the 25,890 mark.
Happy Diwali! I think that picture says it all, right? From the entire team, wishing everyone, all our viewers, a very, very happy Diwali. And you can see that on the screen. It's still a bright green. It's come off from the day's high, so we're not still at 25,900. In fact, as we speak, we're slipping actually quite fast. And we're closer now to 25,800. But look at the mid-cap index. Look at the earnings reactions. And there are so many patakas.
Yeah.
Like an RBL Bank, you've got a DCB Bank. Lots happening.
Well, I guess the market has decided to shrug off and shake off the old and get ready to embrace the new. And the new has had a lot more positives, right? In the last about 10 days itself, we've seen that, turn up in commentary, management commentary, in the earnings so far, in what we've seen in terms of the global expectation as well, with some, hope of a thaw between India and the US, all of that put together. Now, if we do get some profit taking in this last hour, I think it's par for the course, 24,800. If you look at the voices, right, all the commentary, the guests that you guys have also spoken to, I think the consensus is that we are, looking at the next Samvat, in all probability, being better than the consolidation phase that the market has endured very smartly.
I think, Surbhi, you mentioned something about 24. We're at 25 now. The 24 is behind us. 25,800.
25,800, beg your pardon.
Gunning for fresh all-time highs. And, the way sentiment has turned. Towards the end of September, people are getting, all paranoid, no returns in the last year. And, portfolios were absolutely hammered. Precious metal continues to move up. Well, October's been good, right?
Absolutely.
Because the markets are up. The Nifty, the headline index is up close to around 1,000 points or even more than that. And suddenly now we're talking about fresh all-time highs. Hopefully the economy picks up as well. Hopefully earnings does come about. And earnings season hasn't been so bad.
Not so bad,
So I think that's in fact the positive. And ultimately flows, everything will go according to earnings because earnings is the key driver of the markets. So considering that that's picking up, besides sentiment, well, flows will come back, earnings will pick up, and hopefully we're in for a better year ahead.
No, absolutely.
I think the corporate earnings picking up has been a big driver of today's performance. Look at Reliance Industries, 3.5% up. So many banks. The Nifty Bank itself is at an, all-time high. And the NIM performance was not as bad. All the managements, pretty much every banking management spoke about NIMs bottoming out and improving subsequently in Q3.
No, absolutely. And just a point that, why, even if, like I was saying, that even if we get some profit taking now towards the end, or if we have lesser gains than the 200 points, how we started the day, I'd actually take this as in an auspicious way, even this. Because if it's a parabolic one-way move, we all know that then those moves end up getting questioned very, very quickly. But if it's a gradual up move with bouts of profit taking, it's always, perceived to be healthier.
I think we've left a little bit for tomorrow, right? We've fallen from, 100 points. Tomorrow's the Morat trading. So,
who knows?
So maybe we've left a little bit. Anyway, guys, you're watching Closing Bell. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar. With me is Surbhi Upadhyay. And we have a packed 1 hour coming up on the show. And how should you position yourself in the last hour of trade? Mitesh Thakkar from Bonanza Portfolio is now joining in. Mitesh, once again, wishing you a very happy Diwali, your entire team and your family. But first, your thoughts that we've slipped a bit from the day's high, the Nifty Bank too. I mean, what would you make of that, and what's the setup looking like?
Good afternoon, Rima. Wishing you and your family a very happy Diwali as well. I think coming off the highs, I'm not actually surprised given the fact that, we were slightly overbought on the hourly to hourly charts. We've had a rally starting from 25,100 and in 5 sessions, we kind of hit 25,920. So I think, gaining by about 900,000 points means that there would be some profit booking happening given the fact that we are running into practically a 2-day holiday. I think today is a good chance. So the trend is on the upside. But for the time being, the index can possibly see some more profit booking. I think a pullback to support levels of 25,700 would provide you with a very good entry point if people want to take a long position on the Nifty again. Having said that, on the stock side, I have a buy on United Spirits. That's a stock which is just trying to break on the upside. So buy here with the stop just below levels of 1354. Look for targets of around 1400 plus. And the other stock is Cipla. Extremely strong price and volume action over here. So Cipla is a buy with a stop at 1650 for targets of 1680.
No banks, Mitesh? I mean, look at all of them, right? Forget the large banks. I mean, look at the trade today on the tier 2 banks, whether it's DCB, Federal, all of them on the screen, 6, 7, 8%, AU Small Finance, 9%. It's phenomenal. Federal as well, about 6% right now. IDFC First, 6%. So, I mean, what would your advice be? Because the moves have been very sharp on banks in the last couple of days, including today.
Sorry, not, making a point about myself, but check the last 2 weeks and I've had lots of banks, Bank of Baroda, Canada Bank, Bank of India, AU Bank, HDFC Bank as recommendation. And I think now, the only thing which I like right now, which can give you a good entry point from a risk-reward equation is State Bank of India. Today is a fresh breakout over there, so I would keep a stop below days low of 891, so let's say 889. And I think this stock will still do 950 and in a good case, even 990 to about 1000. So if somebody wants to enter fresh, State Bank of India is the best choice. The other banks, I would say, at least take some profits off because we have recommended them about 10-12% lower from here. So I think now is the time to take some profits off and just hold on to the position because the trend is on the upside. But again, they are also very close to overbought levels.
Okay, all right. Mitesh, wishing you a good Diwali. I think we'll get your 3 p.m. call as well. But please wish Shubham from me as well. He interned here at CNBC-TV18, a fantastic worker. And do wish your son for us. Tell him we think of him quite often. Well, let's move on to a stock that's under some pressure. Dixon is under some pressure. Their Q2 volume growth missed what the street was working with. And the street is a little bit jittery about the outcome. Obviously, now the problem is it trades at elevated levels. But let Upasana join in and tell us what brokerages are making of the past quarter's numbers. Upasana.
Well, company has cut its FY26 revenue growth guidance from 40 to 45% to 30 to 35%. Now, if we look at the Q2 numbers, they are largely in line across the board. But coming to the company's key segment, that is the mobile and EMS segment, it has reported a strong set of growth that is 41% on year-on-year basis, while the other segments have seen a decline due to deferred demand on GST rate cuts. Now, smartphone volume, if we see for Q2, there is a sequential volume growth of 8% versus the 15% guidance which the company had given in Q1. So again, it's a miss on that front as well. Looking at the long-term growth target, the company has given a revenue growth target of 1 lakh crore and EBITDA margin of up to 4.5% in next couple of years is what the management has indicated. Coming to brokerages now, CLSA has cut its target price to 18,800 per share. It says that the PLI scheme discontinuation may pressure the margins in early FY27. Nomura has given a buy call with a target price of 21,152 per share. It has cut its revenue estimates for FY26 to FY28 and it believes that the margin estimates are still intact for the brokerage. Nuvama has given a hold call with a target price of 16,600 per share. It says that the margin pressure is possible in FY27, but medium to long term, the growth remains intact for the company is what their view is. And lastly, coming to Phillip Capital, it continues its sell rating with a target price of 9,085 per share. It says that the FY27 mobile phone volume guidance has been cut by 10%, and because of which there can be a margin pressure in H1 FY27. So all in all, if we see, it's a mixed set of views coming down for Dixon Technologies by the brokerages.
Okay, thank you very much for that. Earlier today, we chatted with the management of Dixon about the company's margin profile, revenue outlook. Listen into what they had to say.
We had projected a volume, budgeted a volume of almost 40 million mobile phones for this year, smartphones for this year. I think so we are on track for that. And the first 6 months, we have done broadly 20 odd million. Yeah, within the customers, so we pretty much work with all the customers on the Android ecosystem. Yeah, within the customers, there can be some plus minuses, but broadly we are working towards achieving that 40 million number for this year and hopefully 65 million number for next financial year. My sense is that should be the run rate for the going 6 months as well. So broadly, we should land up at a similar number for this financial year. But with more backward integration play, I think so the backward integration play should continue to add to our margins. Our expansion in the refrigerator portfolio should add to the margin profile and overall the operating leverage benefit. So my sense is next year, because of this largely on account of this backward integration play, we think we can expand the margins anywhere between 50 to 60 bips. Overall revenue guidance, I would say, should be closer to 30-35% for this year. But definitely, we are looking for almost a large growth for next financial year. So between 24-25 and 26-27, we should be broadly able to double our revenues.
Okay, so that's Dixon still guiding for pretty robust growth in their mobile business, despite the miss that we've seen in that particular business in this quarter. And they're saying 30 to 35% growth on the top line as well in FY26. So we've got Dipan Mehta joining in. Dipan, happy Diwali, first of all, to you, to all at home, to your entire team. It's a season of new beginnings and hope of wealth, prosperity. And I think the market is giving us that hint that it's moving in that direction. So first of all, let's get your sense on overall, whether you think the next Samvat will be more rewarding than the one that's closing, and then a view on Dixon.
Yes, Sylvie, good afternoon, and thank you for having me on your show. And of course, season's greetings to you and the entire staff at CNBC-TV18.
Thank you.
So in the 35 years that I've been tracking the market, I think after a very long time, I'm extremely bullish on the stock market at this point of time. And I think the next year, next Samvat will be really great for investors from a returns perspective. And the reason for that is that after taking so many bullets, we are still standing, and and the faith of the Indian investors in Indian equities remains pretty much strong. And with an earnings revival, I'm sure we will see reversal of FI flows as well. So very positive on Indian equities per se. Coming specifically to Dixon, I think first a disclosure, we and our clients are invested in it. We are on the camp which believe that this is really going to be an outperformer for the next 2-3 years or so. And it's all about backward integration. And, even 35-40 basis point increase in the operating profit margins can make a big difference to the earnings per share. So very positive on the company. Valuations have now become reasonable, around 78 times or so thereabout. Trailing 12-month, the higher Ps were almost 110, 120 times or so. So I think that if they're able to double their profits over the next 2 years or so, and then after that also maintain 15-20% type of a growth rate, and the returns could be quite decent over the next 4 or 5 years or so.
Okay, all right. Hi, Dipan. Good afternoon. Season's greetings. Happy Diwali to you, your family, and Varun as well has I've worked with him, your son. So please give him my regards and look forward to catching up with him for a coffee or drink or something. So best wishes, and good to hear that you're sounding very bullish. The question is, I track 2 sectors closely, as a core beat. You pivoted on one of them. You started sounding reasonably positive on cement after being quite bearish or not interested for a bit. What about metals? Not bullish as yet?
Nigel, first of all, season's greetings. Happy Diwali to you as well. And thank you. I think Varun had a swell time at CNBC working with you.
Me too.
Thank you very much for mentoring him. But I've been bearish on commodities for the last 30 years or so. Never really understood the sector. If you're an industry insider, you can definitely make a lot of money on it. But look, I think cement has played out well. Don't you think so, Nigel? I think the numbers which have come through from Dalmia, from Ultratech, I think all very good set of numbers. They have gone back at least to the September 23 figures, which they are in terms of profitability. And I think if infrastructure real estate continues to do well, then you may see even better numbers for the next few quarters or so. So remain positive on cement per se. And I think that the industry is growing a bit more responsibly now than before. And looking at Ultratech's number also and the kind of expansion plans which they have in mind, it does seem that the momentum will continue for the sector as a whole. Look, metals, I think it's, give and take, like Hindustan Zinc looks good, considering silver prices are higher. But by and large, I think, it's all about higher and higher volumes, and how that plays out, one needs to see. But look, I think Jindal Steel and Power's expansion, which is almost 50% higher capacity, which they are creating, and absolutely more or less debt-free balance sheet, does inspire a lot of confidence. Having said that, it's a company in which we have invested, in a small way. So I just like to put that across to your viewers.
But from cement, what do you like? Because suddenly Ultratech has gone ahead and announces big capacity. I'll tell you what the problem is, that they announced this capacity addition at around $52 per ton. So those that wanted to sell out, suddenly their bargaining power will go down. People will say Ultratech is selling about $52 per ton. So one of the big buyers potentially may not be so aggressive, point number one. And point number two, since they're doing the capex at such low, capex levels, the ROC will be mid-teens compared to sub 10%. So, they will be in a very good position. They don't need to undercut the market. How do you view that? Will it be a bit of a risk to the North Indian players, since JSW Cement as well is moving there? You have some capacity expansion. And now 18 out of the 22 million tons that Ultratech has announced will be in North India.
See, I think that it's also, Ultratech is also about India Cements. And we saw the numbers which came from India Cement. You are seeing the effect of the Birla management over there. And as and when the merger does take place over there and further consolidation happens, it will be very positive for the India industry and Ultratech in particular. So I think go with the market leader when the industry is doing so well. If you go with the market leader, you're sure to get at least the returns which are equal to or higher than what the peer group does deliver. And otherwise, also, I think, a lot of these cement companies, their growth rates are kind of, converging. So whether it's Dalmia Bharat or a Shree Cement or the Ambuja group of companies, you'll get similar type of returns, I feel. But there's comfort in a diversified player. That's my understanding.
Dipan, stay on. Wanted to get your views in on the newsmaker of the day, RBL Bank, Q2 numbers and the Emirates NBD deal. But before that, let's listen in to the management on what they had to say.
I feel that with the current trending and the core value which we are likely to create with this deal, I don't think that the people will be looking at responding to the open offer, because it is going to be something which co-creation of the value. And this huge investment which is coming into the bank will also improve the book value also. When the book value moves up, this is something which is going to add up to your market value. Market cap will go up. So taking all these considerations, I feel, this open offer may not kick in much of the numbers, and it will be hovering around 60 plus the branch merger, whatever the percentage is going to come. Immediately it is going to be the RBL to start with, and we have to wait for the things to evolve rather than taking a preemptive thought in that. Today my capital adequacy is CRAR is around 15%. 15. For the discussion purpose of understanding, let us hold it there. Right? In the expanded capital of 42,000, I am going to maintain that as a set aside for the purpose of regulatory capital. So somewhere around 6,000 crores or something like will be set aside. So the remaining around 35,000 crores is something is going to be available for us to expand the business, taking some investment part of it and other things, and a conservative of around 8 times because some of the will go for distribution investment and things like that, technology upgradation and things like that. Leaving those aside, possibly the very rough calculation will make us 8 times if I do it, and it has an ability to grow the asset to the tune of around 2.5 lakh crores. This is something which is a big opportunity. This is not a one year story, it's a 3 to 5 year story what we have been thinking among ourselves. However, the deeper calculations are required to be done and will work much better. I strongly believe this is going to get our credit rating revised. We are now AA minus, and naturally this synergy is going to be you are strongly capitalized, your future growth is assured, and you have bigger opportunity to make the better things, and there will be a positive rating upgrade for the bank is concerned. There is every possibility. See, today our ROA, we are intend to reach around 1% exit ROA with the current setup. So when you are going to get such a huge influx of the fund, the capital, which is interest-free, that is automatically going to kick up my ROA maybe around 0.5% 0.7%, depending on exact calculation we had to do that. So my ROA by design will go up because of this capital infusion. The next 2 to 3 years, with an accelerated growth, what we are looking at, an accelerated path we are looking at, then it will be in a position to come back to its double digit maybe in another 2 to 3 years' time.
Okay, so that was the stock of the day in terms of the news flow, in terms of obviously the big development over the weekend. Deepan, what do you think? RBL Bank, new international promoter checking in. Now, as an investor, I mean, how should you look at it? If someone doesn't have the stock, should they think of buying now? Or if you have it, then should you just wait for this transition to play out? What's the advice?
I think it's a very positive development for RBL shareholders. And on the whole, I think it'll take the bank to the next level. But look, our view on banking is generally neutral to negative. Excuse me. By and large, the numbers which have come through so far indicate that the industry is growing around about the nominal GDP growth rates, which is just about fine. And one needs to get extremely selective in the banks. So I would say it's a great stock to remain invested, but fresh investment, I think better choices.
And Federal Bank and the 10% pref issue?
Sorry about that. Yeah, same with Federal Bank also. Decent set of numbers, and provisioning also is normalizing for the banking sector and Federal Bank also. So I'm very positive, but as such, one needs to be selective. Federal Bank certainly, IDFC Bank also, IDBI Bank I thought came out with excellent set of numbers, and a clutch of small PSU banks, Bank of Maharashtra, Indian Overseas Bank, Punjab and Sindh Bank. I think those numbers also were pretty good. And now their NPA ratios are better than some of the private sector NPA ratios also. On the whole, this entire banking sector is becoming a red ocean. So I'm not sure that they'll create the same wealth that these companies have created over the past 5-7 years or so. Their returns more or less would be in line with the markets, maybe slightly lower.
There have been lots of big movers in the banking space on the back of numbers. So South Indian Bank, 14-15% up. It's a fresh high on that. You've got a DCB Bank, 11% up. AU Small Finance Bank in the NBFC pack also doing quite well. Edelweiss Financial also gaining in trade. So, Dipan, now for Diwali, Mohra trading, which stocks are you eyeing to buy tomorrow?
So, well, our Diwali pick this year is Sem India, which was erstwhile the ITD Cementation and now part of the Adani Group. And it's a company, first of all, disclosure, we and our clients are invested in it. So our views are biased. And I think the company has an exceptionally robust order book position. It has got a lot of scope to improve operations overseas as well. And being part of the Adani Group, there's great scope to increase captive business from that group as well. Although it will be done on an arm's length business, extremely clean balance sheet, and hardly any exposure to all those hybrid HAM projects or where they need to invest a lot of capital, reasonable valuation, good earning visibility. And of course, they are among the top 3 or 4 players when it comes to executing complex infrastructure projects, be it metro projects or marine projects. So very positive on that company. And I think that it could be a good investment over the long term.
Okay, all right. And the new name, Dipan, you said was Sem India Projects, right?
Yes.
Okay, all right. Any view, Dipan, on these refiners? MRPL is buzzing yet again. CPCL again is buzzing. MRPL came out with a good set of numbers. The point is that refiners actually globally have a lot of capacity has got hit in this Russia-Ukraine war. So that's why part of the street believes that better times will come. GRMs have spiked up big time. But other part says, it's too tricky to play them. New capacity is not coming on stream. Both these two companies are likely to reduce debt as well. You will play it or you'll stay away?
No, see, I think, Nigel, it's a cyclical business. And from time to time, you will have some fabulous quarters as well. And some of these companies are expanding their capacities. But really, the real play within the sector has to be the PSU oil companies, the likes of BPCL, HPCL, which are also growing their refining business. And therefore, their dependence on trading or buying refined fuels from other refineries will reduce. A lot of expansions coming on stream, reasonable valuations, and the government is quite keen to improve their the valuations and then the kind of companies that they are, what strength they reflect. So I think that after a long time, we're getting quite positive on all the 3 oil marketing companies, Indian Oil, HP, BP. They are valuable companies in terms of assets they have on the ground. And there's stability when it comes to these companies because the marketing margins do not fluctuate as much as the refining margins. So very positive on these companies. And I think that certainly their P's can get re-rated upwards. It's one sector where the P multiple is lower than the global averages,
Okay, got it. Yeah, I mean, and hopefully these, as you said, marketing, refining margins, both them looking up. So OMCs would be the way to go. Well, Deepan, we thank you for joining in, giving us your view on a lot of the stocks as well as sectors that we discussed. Wish you well, and we'll catch up soon.
Thank you.
For the time being, slip into a short break. On the other side, I think Jigar Mistry is waiting for us. He'll be joined to give us how he sees market shaping up and all the top themes that he's betting on. Welcome back. Well, the breadth of the market, the number of stocks declining and advancing, they're getting a little closer to each other. But one would have to say it's par for the course. The kind of rally that we have seen. Radico Kaitan, maybe it's going to be in business later tonight. One of those stocks that are moving up 3.5%. That said, let's welcome Jigar Mistry, co-founder, Buoyant Capital, who joins us on the show. Hi, Jigar. Wishing you a very, very happy Diwali. As we were talking in the break, what a great move, Jigar, you made over the last few years. Sell side, working for a company, starting your own, and flourishing big time. So wishing you and everyone at Buoyant a very, very happy Diwali, and wish you well. May you go from strength to strength. That said, Jigar, been through a challenging phase. Yeah.
Thank you, Nigel, and happy Diwali to all of you, the CNBC family. Just learning from how well CNBC has gone from strength to strength. Plus, the markets and God both have been kind. So, it's time to count our blessings on such auspicious days as well.
Well, that's right, Jigar. Everyone's growing. It's good to see the equity cult here in India being formed as well. I recall before you launched it, we had a brief discussion when you said, this is my plan, and happy to see the way you're executing. Let's look ahead, though, Jigar. What about the markets? How are you feeling about it? We've had a good 1,000-point rally. Suddenly, the sentiment seems to be turning, and hopefully, there's a trade deal somewhere in the offing. How are you feeling about the markets? And give us that one theme, that one Fataka theme for the next 1 year, which you all are reasonably bullish on.
Right, Nigel. So see, despite that run, India is still among the worst performing markets on a year-to-day basis, save for Philippines, Thailand, and Malaysia, right? The best performing ones have been Korea, Mexico, Germany, and Brazil. And I think one of the key reasons was, and we were talking about a month ago as well, Nigel, that if you look at every time a dollar depreciates, money flows out of the US markets into emerging markets. It has happened this time as well. But instead of coming to India, it has gone to a lot of other emerging markets, sort of Korea, Japan, to name a few. And the reason why it hasn't come to India is because the rupee has depreciated against a depreciating dollar. So it's sort of a double whammy that the foreign institutional investors in India had to sort of tackle. Secondly, there were concerns around trade deal and weak quarterly print that we were saying continue for the last 2 quarters or so. At the end of it, I think both of those things look like they are solvable. We've discussed in the past how the Trump administration eventually will run out of time, whereas China has 20 years to think about. India has been a collateral damage in the piece, and eventually, I think in the next 3 to 6 months, things should resolve. Secondly, the kind of impetus. Now, when you total the central state sort of the money that has been put in the hands of investors, that's totaling to somewhere around 4.5 to 5 lakh crores. That's almost 1.5% of GDP, and eventually it will sort of turn up in a few phases, in a few segments. I think one thing that you asked me at the start of it, I think eventually it won't be more soaps or oil getting sold. Across the board, it is the premiumization and the YOLO theme that will sort of ride through. There will be limited place in the public markets, but there are plays nonetheless which are available and interesting. Banks and realty has driven the market so far. Incrementally, I think there will be a lot more other sectors that will pick up. As I said, not sort of your rudimentary oil and soaps, but a lot more interesting themes as we go ahead, Nigel.
Tell us a few names in the consumer discretionary space. We know there is an Indian Hotels, there is a United Spirits, an Interglobe Aviation, all to play the premiumization, the YOLO theme, etc. But name some that you like.
Right, Rima. So, stocks is a bit difficult given where we come from. But I think the few names that you did mention, we have plays in aviation, we have plays in leisure, we have also plays in cement, which might look like very counterintuitive. But remember, the states have pushed in 1.5 lakh crores. Uh, we discussed this last time that almost 70% of the cement by volumes get sold into a segment called, individual house builders. And these are the people buying 10 and 20 bags of cement. And that will benefit at the core. Doesn't look like premiumization when we talk cement, but effectively it's an upgrade for what, that housing, that level of housing has been doing. So we are keen on that space as well. And lastly, I think to round it all off, and that might sound a little bit boring again, but different sort of various ways of lending institution is still a way to play around. We have seen a couple of names, move up today in that spec segment. But again, there are a few lending names that make the cut to sort of finance that premiumization theme that we are keen on.
Jigar, hi, season's greetings. Wish you a very, very happy Diwali. You've actually led me to my question. I did want to discuss financials in more detail because it's very clear, right, that finally after a long hiatus and a lull, banks are catching up. Even big banks have started moving. The numbers have been looking decent. And there's a near consensus, at least now in the market, that second half, margins should eventually improve as well. But it's a very large segment. What do you play in financials? Do you play NBFCs, big NBFCs, small NBFCs? Do you play mid-sized banks chasing more growth? For instance, we spoke with IDFC first today. They're growing at a 20% clip. Or do you stay with something stable and steady like an SBI, ICICI Bank, or even HDFC, right? Pretty stable numbers. So what should the playbook be for financials?
Right, Surabhi, season's greetings to you as well. I think for the first part, we shouldn't really be too concerned about a NIM compression. Our view is that a huge host of cuts are not really coming. And whatever couple of more that they are in the offing, you are talking about sort of a place where the NIMs contract first and then they recover, right? The banking institutions reduce their lending cost later than their deposit cost, and therefore it's a cycle that eventually plays out. Within that spectrum, the sort of mid-sized bank tend to do a little better. The larger NBFCs tend to do a little better. The staple banks, the larger private sector banks continue to remain our focus areas as well. We don't really think there is time for MFI's turnaround to happen yet. We have not fully priced in the risk, but eventually there will be a time even to play those. Now, given that that sector has held up really well over the past 1 year or so, the composition within that, even within our fund, has changed quite significantly. But I think that segment remains very interesting. If you are sort of in line with our views that a huge host, like we're never going back, never is too strong a word, but we are not very soon going back to sort of those zero interest rate environments. Given how fast we'll de-dollarize in the next decade or 2 decades, we should be prepared for reasonably elevated sort of interest cost across the globe.
All right, Jigar, I think Marathon, the real estate company, Marathon Next Gen, is a company you'll have in the portfolio. So what are you all bullish on? The company specific, or are you all bullish on the Mumbai market? Give us some rationale out there, because I think that's one of the stocks in your portfolio.
Right, Nigel. So I think, among the other things, as I said, it's a reasonably decent theme and Mumbai markets operate sort of on its own. For the company itself, there are a few interesting projects that they are undertaking in joint developments. And that sort of makes us interested in a play like this. Real estate per se has done fairly well in the past, like year to date as well. So as a theme, broadly speaking, anything that is priced in a fiat currency is interesting to us. Commodities, we play through a few names. Real estate, we play through a few names. And similarly, gold and silver, obviously, sort of silver, there is a play in the portfolio as well. So we did sort of in the last interactions, we did discuss on why reducing dollar essentially means that all assets with fixed supply priced in dollars tend to, in a nominal currency, inflate. And that is sort of one of the themes why we are interested in, beside the company specific cases.
Shelley Engineering Plastics, is that a company you all are interested in?
No, Rima, we don't own that.
Okay. I think the last time we spoke, you had a fair amount of cash. I think close to about 10-15%. What is the cash holding now? And are you incrementally deploying now?
Hey, Rima. So, see, for a fund like ours, which doesn't follow a model portfolio approach, the median, cash levels in client accounts and the total cash at the fund level is slightly different, because in times when the incremental inflow is elevated, we may have been taking a little more time to deploy, and therefore that shows up. Plus, in a commingled fund concept, which sort of alternative investment funds are, you see at the month end, because of inflows, cash is slightly elevated. So, accounting for that, I think we don't believe cash is a very interesting asset class. One data point I'll give you right now is that if you were an investor in the past 25 years, 10 days have driven between 55 and 57% of index return, depending on which index you're talking about. Now, if you tend to miss a few of those days, which most of us will, then the return profile tends to come down a lot. So net-net, we are not all that keen to hold cash, except that we may take time to deploy. Therefore, it shows higher. Today, to answer your question, we are in a single-digit number.
Okay, all right, Jigar. Thanks a lot for joining in. Have a rocking Diwali. May the fatakas, just explode for you all. Wealth, health, and happiness, Jigar. Thanks a lot for joining in.
As well. Thank you.
That part of the show when my man is joining in. The birthday boy, the birthday celebrations, going to be popping the champagne later today, cutting the cake, and the celebrations will flow in. Double dhamaka for Hormuz, but for the time being, he wants to tell us about all those that are moving and shaking besides him. Hormuz.
Thank you so much, Nigel. And what's already popping the champagne are all the banking names. You pick a name up and it is moving, a trigger or no trigger. You take a look at the volumes at which these stocks have moved today. Look at DCB Bank. Of course, the earnings were fairly strong. Look at almost 5 crore shares have been traded on DCB Bank. The 20-day average is just close to 7 lakh shares. RBL Bank, of course, was supposed to be in the news all along, but 9 crore shares have been traded, and it's almost double of the earlier average. Federal Bank has almost had 5 crore shares traded, 10x of its 20-day average. AU Small Finance Bank at record highs, again 10x of its 20-day average. And look at the volumes on South Indian Bank today. The stock is up 18%, but we have had 26 crore shares that have been traded, and the 20-day average is just around about 1.7 crore shares. So moving on very, very strong volumes is South Indian Bank. The other one is Dunseri Ventures. Now, the stock was down 20% last Friday, seeing a rebound in today's sessions, up 10% today. And today's volumes have already surpassed the volumes that the stock had on Friday when it fell 20%. Now, if you take a look at the total volumes that have traded today, they have had significantly higher than their 20-day average. They are the highest since November of 2023. And we have had close to 70.5 lakh shares that have been traded. The 20-day average is 62,000 shares, not 6,200. And despite this, the stock is still below its key moving averages, down 11% so far on a year-to-date basis, and annual returns positive since 2020. And the last one on the list today, Rajratan Global Wires, the biggest single-day gain that the stock has seen since April of this year, so the biggest intraday move in 6 months. The volumes today are the highest in almost 9 years. They are the highest since October of 2016 on this 18% move on Rajratan. 31 lakh shares have changed hands. The 20-day average is only 54,000 shares, and the stock has now moved well above its 100-day moving average of 369 and even its 200-day moving average of 379. So above all of the key moving averages is Rajratan. But despite this move, the stock has been an underperformer, down 25% year to date, and has had 3 back-to-back years of negative returns. Back to you guys.
Thank you very much for that. We will slip into a break on that note. We'll come back with a few BTST calls from our technical experts. Stay tuned. Welcome back. The mid-cap index is up about 3/4 of a percentage point. On the way down is Ola Electric, You're seeing softness in JSW Energy, Hindustan Zinc. Swiggy is taking a bit of a breather. On the earnings reaction front, Tejas Networks has been a big accident. Tanla Platforms too, where the earnings growth continues to remain very, very modest, just 7-8% up on a year-on-year basis. UTI AMC has taken a knock, and Dixon, we've been talking about that, that's still lower by nearly 4%. But for all the action in the futures and options space, Nigel has walked over to the F&O desk.
Few minutes before expiry plays out, and the reason we've come off the top is because the call writers, they're trying to come back into the game. So if you look at it, the 25,850 call, you've got the direction right because the Nifty is higher. However, you're not making money if you bought that strike because there is aggressive writing that we've seen out there. That's why the premium has collapsed. On the downside, the 25,800 put as well, let's see a fair bit of open interest build up. And the premium from around 100 rupees, it's down to almost zilch out there. So we have a bit of a range, 25,750 on the downside, 25,900 on the upside, going by the options data. Individual stocks that we're looking at, ICICI Bank, there's a big shorting that we're seeing in that particular name. Stock is down, open interest has swelled up, and that's a big underperformer actually from the Nifty Bank itself. So that stock should come up for you on the screen. On the flip side, actually, you have fresh buying being seen in AU Small Finance Bank. Surge, just take a look at the surge we've seen in the stock, and it's backed by big open interest build up as well. So that's clearly the big mover in today's trade. Reliance Industries, that's done the heavy lifting. It's taking out some crucial technical barriers today. The stock, if it can go 30-40 points rupees higher in the coming few trading sessions, it could trigger a bigger short covering bounce. But today we have a bit of a demo or a trailer that's taking place on Reliance Industries. And finally, even on RBL Bank, there's a big short covering bounce that's taken out. The open interest, if I got that number right, the open interest is down by close to around 10% and the stock is firing up. However, I think RBL Bank continues to remain in the F&O band, going by the data points that I just had. Earlier this morning, there was big shedding, so it appeared like it could come out of the F&O band, but I think it could spend some more time in the F&O band. Back to you, Rima.
Thank you very much for that. Jain Resources is spiking up. It's one of these recent listings. It's a company which recycles copper waste and makes it into a little more value add. So it's a big play on India's recycling potential, and eventually the company says they also perhaps are looking at exploring electronic recycling since we generate so much of that. So Jain Resources is moving up, and the other one is Tilaknagar Industries. Remember, it also entered into the premium whiskey play post the acquisition of Imperial Blue from Puerto Rico. That happened a couple of months back. So again, a play on premiumization, and that's a stock which is spiking up, 4% up on that. Mitesh is back with us for a few more BTST calls. Mitesh, it's a long 2-day holiday. I mean, tomorrow Muharram trading, but what's the advice?
I think IDFC First Bank, which has been a recognition earlier, looks good to me for a BTST kind of a trade. The idea is that the stock is seeing good continuation, the sector is enjoying momentum. So BTST here is the stop at 76.20 and a target of around 78 when we look at. The other stock which I like, that's something which I recommended in the past. We said that is JSW Energy with a stop at about 529 so 519.
Thank you. But banks is where it's all happening today. The Nifty Bank has also hit a fresh record high. Gaurav now joins it with the fine print of the banking numbers that came out over the weekend, including the big ones, HDFC Bank and ICICI Bank.
Well, let's talk about the big banks. HDFC Bank, when we look at it, profit increased almost by 11% on a year-on-year basis. And what remained positive is that the net interest margins, they declined by 8 basis points, but it was in line with the street's expectation. The asset quality, that also remained healthy. The credit cost came in at around 0.5%, and at the same time, management said that in FY27, they will grow faster than the industry. Apart from that, when we look at ICICI Bank, results were good, but at the same time, when we look at the other metrics, net interest margins that declined just by 4 basis points. Now, it was a positive actually. In fact, when we look at profit that increased by 5% on a year-on-year basis, but now the street is a bit concerned about net interest margins growth. Because remember, management said that the margins are likely to remain range-bound in the next quarters. And now brokerages say that this is actually a bit negative given that other banks are giving a guidance of improved margins in the next 2 quarters, and whereas ICICI Bank says that the margins will remain range-bound. Apart from that, there were some small banks who are buzzing in trade today. First, let's talk about AU Small Finance Bank. Now, the key triggers which are actually driving the growth. First is that net interest margins that expanded almost by 5 basis points on a sequential basis. Apart from that, the credit cost, now that declined almost by 26 basis points to around 1.7%. And in fact, management says that the credit cost is likely to be around 1% for FY26. Apart from that, when we look at loan book growth, that also was healthy at around 22%. When we talk about DCB Bank, here also we saw net interest margins actually expanding almost by 3 basis points. And at the same time, this bank also gave a positive surprise in terms of credit cost that declined sharply by 28 basis points on a sequential basis. And remember, management, while talking to CNBC, also said that the credit cost is likely to remain somewhere in the range of 40 to 45 basis points. Remember, the bank is also moving towards the 1% ROA mark, which is positive. Lastly, let's also focus on IDFC First Bank. When we look at net interest margins, although they declined almost by 12 basis points, and now they stand at around 5.6%, management said that by the end of FY26, we will see net interest margins somewhere in the tune of 5.8%. Credit cost, now that declined almost by 50 basis points, and here also management gave a positive guidance, and at the same time they also said that the bank will achieve 1% ROE in FY27, which is currently at 0.4%. All of these banks, when we look at the stock performance, they are up more than 5% in trade, so definitely it will be worth watching out on how investors gain in trade from these banks in coming days as well.
Thank you very much for that. Sudeep Bandyopadhyay is now joining in on the last leg of the show. Sudeep, when we started Closing Bell, we asked Dipan his Diwali pick. And he said it's ITD Cementation, whose name is now changed to SEM India, is owned by the Adanis. So same question to you. If you had to recommend one stock for the next somewhat, say 12 to 18 months, what would it be?
Well, I think I'll, Rima, go for large cap universe, and I will recommend two stocks, not one. One is Ultratech Cement. We have been bullish on cement for quite some time, and our kind of thesis gets more and more, improved with what's happening on ground. We are very strongly positive on Ultratech Cement. Look at the greenfield expansion which they have announced, and the cost per ton of the expansion. I think it's quite impressive, and of course the demand is going up. The demand supply situation is such that the pricing power is definitely going to be there with the manufacturers for quite some time. The cost efficiencies have been kind of extracted very, very well. So, Ultratech Cement from a one-year perspective, definitely worth buying. The other stock I will take the opportunity and recommend is Bharti Airtel. I think, we know what's happening with Vodafone, Airtel, and the AGR dues, and, what's happening in the Supreme Court. The expectation is that some relief will come. Of course, I'm not talking about Voda here, but if Vodafone gets a relief, I think it will automatically also result in relief for Bharti Airtel, which will be a bonus on top of whatever else good things is happening at Bharti Airtel, which includes the ARPU increase as well as the margin improvement, international business doing better and better. So I think both these stocks from a long-term perspective, one-year perspective, definitely needs to looked at.
Thank you. And of course, the big bet is that Jio, ahead of the planned IPO in the first half of next year, will also do a tariff increase, because the last tariff increase happened about 15 months back. So investors are betting that the industry will take another tariff increase because that will just help the Jio IPO. But Sudeep, request you to stay on because we just want to get our viewers some of the interesting Diwali, bites, the opinions that we got. So as India's dream, the question is, has India's dream run finally paused, or is this a catch-up phase before the next leg? We spoke to a few market veterans let's listen to what they had to say.
India has done very badly this year relative to peers, emerging market benchmarks. So over 5 years, India has still done better than EM and China and all. Maybe only US has done better. But this year, India has had its worst relative performance in 30 years, which is some 27% underperformance in 10 months.
Right.
That beyond a point does not last. Second is, what are the reasons why FIs are selling? I've been feeling that the world is interested currently, and not feeling that, you can see with data, that the world is putting a little bit of its global money into non-US markets. And it is not that they are doing it as a longer term play. Even currently this year, non-US has beaten US by more than 10%. So S&P is up some 13%. World, excluding US, is up some 23-24%.
Right.
So you can do it because you are upset with US policies or tariffs.
But there's performance as well.
And there is so it's not that
Correct.
I don't like US. A little bit only. And so if the rest of the world is getting money, so if the US is at 65%, if they reduce 3% for US, only 2%, and give it to the 35% part of the market, for them it is 6-8% growth. In that, we have a valid claim that we should also get money. But instead, India has been losing or people have been redeeming. I think that had to do with the extra tariff and the isolation.
And hopefully
of
that
India.
also perhaps.
That I think is getting over.
This bull market started originally with PSUs in defense and railways and all. This bull market by no means is over.
Right.
I think the PSUs took a backseat.
Right.
If they privatize, for example, or sell big stakes, why are they holding on to NALCO or SAIL and the others? So PSUs generally are beaten down, neglected, other than the defense and all, which are of course doing fantastically well. Maybe also an interesting place to look for an asymmetrical bank.
Which is PSU banks.
So it could be banks, it could be some of these metal names, which is again playing into this hard assets theme that, like, I'm just surprised people haven't realized Vedanta will make more than $1 billion on silver, which is a byproduct. So the amount of earnings coming through in metal companies is unbelievable what is happening. The highest rate of change this year in terms of earnings will come in Tata Steel and Jindal, for example. I'm not suggesting the stocks, but the thematically, the way it happened in 2000-2010 period, the move into hard assets and the earnings that can come out from there can be very dramatic.
Traditionally, I've been more positive, always been in equity, and that fundamental view has not changed. You can tactically use gold and silver as an asset allocation call, but I don't think someone like me can invest heavily and significant portion of my portfolio in gold and silver for a long run. And my premise is based on very fundamental thing that all the noise about this gold and silver price is all technical in nature. There's nothing fundamental about it, right? There's no real fundamental usage of gold or silver which can justify these prices. We're all talking these central banks are buying, dollar debasing, and I agree with Manisha's point. But when I buy good companies, their earning could go up. Like if I buy really good companies, their earning could double in 4 years, quadruple in 8 years. So effectively, I'm buying those companies much, much cheaper 8 years down the line. The same is not true for gold and silver.
Well, the gains are still there. It's still green on the screen. But Nigel has hopped across from the studio to our newsroom, where I think he's got a pretty charged up atmosphere all around him. Look at that. Nigel, what a full frame.
Well, Surbhi, this is the entire CNBC-TV18 team in its full glory. We have all the morning producers with us. We have the evening producers. All those graphics that come up for you on the screen. If you feel they look good, well, these are the people behind that. We have our, our debates, and ultimately we try to put the best on the channel as well. And Ritika is our head of the morning team, my best friend. And obviously, if you find the guys that look good, on a day-to-day basis, and if you find the ladies' hair looking very, very good, then we have the makeup team. Dada. So Ivan, Santosh, we have all the ladies who make sure that Surbhi's hair in particular is looking good, because she's a bit of a problem pocket in the morning nonetheless. But the man, I think, who's been here for the longest amount of time and the backbone of the channel is Shankar sir. Shankar sir, you're going to be saying a few words for us, I believe. And I think the audience says, Shankar sir, Shankar sir is going to be, he's been a guide, not, obviously to me, but to many, many anchors and people who have been here for long. So Shankar sir, how do you feel?
I just want to wish happy Diwali to all our viewers, everybody. Yeah. That's all. This is the time to have fun. Let's have fun.
Okay, all right. And so Shankar sir, I better not push myself, otherwise could be a little bit more trouble. But let me introduce you to a couple of stars, who we don't see very, very often on the channel as well, but very, very, have a vibrant presence on digital. Diya, do you like to say a few words? How do you feel? How many Diwalis have you been here?
2.
And how do you feel about it?
Great. Amazing.
Yeah. I believe my boss as well is joining in. Sonal Sachdev is going to be saying a few words for us. A few words. our audience, the man behind everything, all the research that comes out, who pulls us up off and on, but that's part of the job. Yeah. Sir, how do you feel?
All good. Very good. Wish you all a happy Diwali.
Thank you so much, sir. Thank you. But I think we have a couple of more people who have come in there. The PCR, when we are in studio and you have someone who's telling you what is to be done, what isn't to be done, and obviously, being the backbone and basically the heart and soul of the show is the PCR. And the PCR team is here, finally. Kashi hai? How do you feel, madam?
Good.
What is special about this Diwali?
We all are together. More than that.
And madam has been smiling for the last few days as well. So a few more words from you. How do you feel? How many years have you been here?
20 years.
20 years. Wow. So you have grown with the channel.
Yes.
And it's going to be a fantastic Diwali?
Yes.
Yeah? Akansha, what about you? The little baby just celebrated her birthday and you as well celebrated your birthday. So what's the feeling like?
Good. Awesome to be here. Happy Diwali, everyone.
All right. And we have the digital team as well. Tapsu is here. Tapsu, how do you feel?
I feel amazing.
Happy Diwali. All right. Last 10 seconds. So let's get to the countdown. 8, 7, 6, 5, 4, 3, 2, 1. Well, that's the bell for you. It's been a good trading session. I think we have a few more people who are going to be joining in to ring the bell, if you'd like to. But it's been a good trading session, and I think no better way to celebrate when CNBC-TV18 in its full glory is here. Producers, the makeup artists, you have the hairdressers, PCR team, the backbone, Shankar sir, who's kind enough to give us a few words. So it's that sort of an atmosphere. We're feeling like it's Diwali. It's beginning to look like Diwali. I think Reema wanted to say that the other day. It's not only beginning to look like Christmas, but Diwali as well. So it feels good. Let's ring it one final time before we toss it back. All right, guys, let's do this together. 1, 2, 3. Happy Diwali! Well, I think that's it with regard to entertainment from here. Now, post-market, we'll meet again. But thanks so much and good trading session. Back to you guys in the studio.
Thank you. That's so nicely done. I'm so glad you called out all those names because you just see 4, 5, 6, 7 of us here on the screen. But there's an army out there behind the screen that's working to bring these shows to you day in and day out. The news never stops, and nor do we here at Team CNBC TV18. So thank you for joining in. Wish you all a happy Diwali. Of course, Reema's taking a leave. I'm going to continue. Vivek's coming up next because we'll wrap up the day's action on Markets Forward in just a minute.